We are in uncharted waters. You know, the previous American administrations pretty much endorsed world trade, freedom of trade, the WTO, and all of these other agreements, multilateral agreements. Trump is going in the opposite direction. He wants bilateral agreements. He is really upsetting the apple cart, so to speak. And therefore, the uncertainty will grow, not only in the general larger markets like the U.S. and Europe, but in emerging markets as well. So we're going to have to be focusing very much on individual countries, individual companies, to see where the winners and losers are going to be. But it's going to be a very interesting time in the next year or 2 years.
And Mark, at this point in time, do we know enough to figure out who the winners might be, in your view?
In our view, in terms of the emerging markets, some of the most interesting now, because of their tremendous decline in the currencies and in the markets, would be Brazil, would be one example. Turkey would be another example. And then, although India has not come down that much, there are tremendous opportunities in India because they're going to pick up some of the slack that is coming from the trade embargo on Chinese goods. So I think you have to look at those countries that will benefit from this trade war. South Korea would be another example.
Mark, you talked to us in May, I think it was, on May the 23rd to be precise. You said that you saw significant opportunities for you in the technology space in China. Have those opportunities come and gone, or are those opportunities become more glaring as a result of some of the falls that we've been witnessing?
They're still there. And I'm talking primarily of the small and medium-sized companies that do components and other parts for the technology arena. I think there are tremendous opportunities in China in that regard. And, of course, a lot of these companies don't have to necessarily depend on exports to the U.S. They're supplying the domestic market, supplying domestic producers. And, of course, China is exporting to other parts of the world as well. So I think that's where the opportunity is. Many of these companies are ignored, and many of them can't get listed in Shanghai. So they're going to be listing in Hong Kong and other places in the future. But now is, I think, the time to look at those companies.
Because of what's happening right now between the China and the U.S., are there any sort of long-term assumptions that we need to rethink on sort of the path of development on the Chinese mainland and also equally of the U.S.?
Many changes. I think one of the things that the Chinese realize is they cannot depend on the U.S. to be a buyer of all their products. So they are expanding globally. And, of course, the One Belt, One Road project is part of that program to expand the Chinese footprint globally so they can be exporting not only to the U.S. but to all other parts of the world, particularly emerging markets. So that's going to be a big change. The other change, of course, is that it's no longer cheap consumer goods. It's going to be technology. It's going to be high-grade technological products. For example, in the telecoms area, China is a big exporter of telecoms equipment around the world now. And I think that's going to continue and be a big factor going forward.
Mark, absolutely. So the thing is, do you look at these countries as they go up the value chain and you see what they're doing, as you mentioned, but who's going to be making the low-grade stuff? Is that who's going to be those players?
Well, that's the reason why I say there are going to be opportunities in some of these markets. For example, I was in Turkey a few weeks ago. Turkey is a big producer of low-cost garments. So they could become a replacement to some extent for Chinese exports of garments. Another good example would be Vietnam. Vietnam is now a big producer of low-cost footwear. So there are a number of these countries. Bangladesh, another big textile exporter. So these countries could become winners as a result of this so-called trade war.
just back to the trade issue, I mean, the core of it is really access to technology, and perhaps the Americans looking to stifle the growth of China in that space. Who's the biggest loser here? Does China lose the biggest because they lose access to U.S. technology, or does the U.S. lose more because they lose access to Chinese financing for their technology sector?
I think in balance, probably China will be the loser if this continues, because if the U.S. restricts the imports of technical products from China, this will be a big hit for China. If you just take, for example, the Apple Watch or the iPhone, a lot of this comes from China. If the U.S. puts a restriction on that, then, of course, that production will have to move to the U.S. So this could be a big problem for China.
Mark, very quickly, 10 seconds. Give me one trade that you are really convinced about. Very quickly.
I can't give you the name of a company, but I would say the one trade would be companies, consumer-oriented companies in India.